Howdy everybody, I'm Gary and this is GLoPersonalFinance, where I talk about getting our finances under control, building wealth, and becoming financially independent. Now raise your hand. Come on, be honest with me. Raise your hand if you've been paying taxes all your life, but you have no idea how taxes are taken out of your paycheck. Seriously, this is me in a nutshell up until a few years ago. I've been working and having taxes taken out since I was like 16 years old when I got my first job. I knew taxes had to be taken out, but I didn't know how the heck taxes were taken out. I just pretty much let it happen. However, part of building wealth is having a general idea of how taxes work. Keep in mind, I am not a tax professional, so please consult your CPA for your tax needs. So let's get started and learn about how federal tax brackets work. Tax brackets. I think the majority of the United States has the wrong idea of what a tax bracket is. I keep on hearing people say,
I don't want to get that raise because that'll put me in the next tax bracket and my whole salary will be taxed at that higher bracket.
No, this is not true. I want you guys to think of tax brackets like tax buckets. Only the money in that bucket will be taxed at that bucket's rate. Anything overflowing will spill to the next bucket, and only that money in that next tax bucket will be taxed at that rate. The money in the previous buckets will never be affected by the higher tax percentage. This is called a marginal tax rate. As you make more, only the higher portion of your money is being taxed at that higher rate. Now, I know what I just said was a whole bunch of words and probably extremely confusing. Heck, I was even getting lost talking about it. So for me personally, I'm a really visual learner, so hopefully I can show you with all my amazing graphics and drawing skills. Let's do a hypothetical. In the year 2020, you're a single filer and made a total of $50,000. Now looking at the tax bracket chart, you can pause this video and take a really good look at it. But you're right here at the 22% tax bracket. I know what a few of you are saying, look at that jump from 12% to 22%. I don't want to make $50,000, I don't want to pay 22%. Now remember, this doesn't mean everything you make will be taxed at 22%.
Let's go ahead right now and let's take that $50,000 that you made. $50,000 that you made in 2020. And we're going to start filling up these buckets. Now this first bucket right here, this first tax bracket right here, this little bucket right here, this bucket is taxed at 10%. And this bucket only holds $9,875, right? Holds a total of $9,875. So what we're going to do is fill it up from our $50,000. So we're going to subtract out $9,875. And what we're going to do there is we're going to take that money, and we're going to put it into that bucket. That's what we were doing right there. We do have $40,125 left. We have $40,125 left. Okay. Now this bucket here is a little bigger. This one holds a little bit more money, so I'm going to make it a little bit larger. Okay. This bucket right here is taxed at 12%. But this bucket holds a good amount of money. It holds $30,250. So we're going to subtract that from the money that we had left. So I'm going to subtract out $30,250. And what we're going to do there is we're going to take all of that money and we're just going to throw it in there. We have about $9,875. We have $9,875 left to be taxed on. Now what we're going to do next is we're going to go up to the next tax bucket. This tax bucket holds quite a bit more, but this tax bucket now is taxed at 22%. This bucket holds a good amount of money. It holds $45,400 holds all that money. Okay, but we're not going to fill it all the way up. I mean, we only have $9,875 left. So we're just going to put the rest of that money. We're going to put the rest of that money in here. We're going to put the rest of that money in there. Let's go ahead and tax everything out. So the amount of money in here is $9,875. This one was all filled up, remember? So there was $30,250 in here. And then this bucket was, the first bucket was all filled up also. And we have $9,875 here. All the money in these buckets are going to be taxed at that specific bucket's rate. So let's see how much we are going to be taxed right now. Let's go ahead and delete all those. 9,875, that is going to be taxed at 10%. So we're going to be paying from this bucket, we're going to be paying $987.50. That's the amount of tax that we're going to be paying. Our next bucket that's going to be taxed is the 12% bucket. The whole $30,250 is going to be taxed at 12%. So we're going to be taking $3,630. That's going to be taxed from there. And then the last amount of money, that $9,875, that's going to be taxed at 22%. $2,172.50. $2,172.50. All of that. And then so we add all these tax buckets together. Let's see how much total taxes we're going to be paying. We're going to be paying a total of $6,970.
This is how a marginal tax rate works. So instead of thinking, oh, I made $50,000 in 2020, I'll just multiply that by 0.22 and I'll pay $11,000 in taxes. But you know better. Tax brackets are like tax buckets. So to recap, that $50,000 you made in 2020, you paid $69.70 in taxes, making your effective tax rate 13.58%. Definitely way lower than that previously 22% you were thinking. Moreover, on tax day, more than likely you're going to be taking this thing called a deduction. A deduction is a special golden bucket that the government does not tax. And what's great about this golden bucket deduction is the money you put in that bucket is money from the highest percentage bucket first, and you work your way backwards. When you put that money in the golden untaxable bucket, the government leaves their dirty tax hands all off of it. Most single filers will take what is called the standard deduction. So looking at your buckets, you'll be taking $12,000 worth of money out of the biggest bucket first.
So going back to your buckets, this $98.75, all of this money that was in this bucket, what's going to happen now is we're going to take that money and put it into this golden bucket. That's what a deduction is. A deduction is a special bucket that we're going to take money. We're going to be taking money out of the tax bucket. So we're going to take out the full $98.75. We're going to take out $98.75 and we're going to put it into this golden bucket. And then now you can take $21.25. You can take $2,125 from here, from the 12% bucket, and then throw it in your non-taxable golden bucket. And now putting it in this golden bucket, your money is never going to be taxed. This is called the deductions bucket.
So first and second bucket tax added together, we're paying a total of $43.6238 in taxes, making your effective tax rate only 8.7%, not 22% that we originally thought. Now I know taxes are taken out every paycheck you get, and the way they figure out is pretty straightforward. So if you get a monthly paycheck, they'll multiply your salary by 12 for the whole 12 months, do the bucket thing, and whatever number that they get, they'll divide that number by 12 to bring it back to the monthly rate. And there it is. Those taxes are taken out of your paycheck. There are these things called allowances that sort of mimic a standard deduction, but to calculate that, that's a whole other video altogether. Like any personal finance stuff on YouTube, please consult a tax professional or CPA for tax questions. However, this should give you a good rundown of how our federal tax brackets work. Hopefully you guys learned something from this video. Please do like and subscribe to stay tuned to more interesting ways for building wealth. If you know of others who would benefit from my videos, please recommend them to my channel. Knowing our tax system and knowing how to utilize deductions to your advantage is all part of building wealth. Check out the links down below for more ways I build wealth. Y'all stay safe out there, and I'll see y'all later.